What is going on, investors? Hopefully, you guys are having a wonderful day out there. It is time to talk about Nike Incorporated, ticker symbol NKE. The company just reported their Q1 numbers after the bell today, and we will get into it. The stock's off just slightly in the after hours. We'll talk about that. They did miss on that revenue side. We will discuss that. The other thing, obviously, we're going to do on today's show is we're going to get into the numbers. We'll take a look at the revenue. The gross profit is a key line that I like to look at with Nike. We'll take a look at the profits. We'll take a look at the balance sheet. The other thing that I think is really important to look at with Nike is the different segments in the different countries. We've talked very extensively on this show about China and the importance of that, and we'll see how that region is holding up in terms of revenue and profits for Nike. We'll also look at this from a technical perspective as well. As you recall, on our last video on Nike, this thing exploded after last earnings. It went from $135 per share up to about $155 per share, and it rallied hard all the way up nearly $175 per share. Now the stock has pulled back a little bit over the last few weeks. It's trading at about $158 per share. We'll talk about what that means from a technical perspective as well. The other thing that I want to talk about is every time I post a video about Nike, I get a plethora of comments down below how the company is too woke, and I don't agree with what LeBron is doing. I don't agree with what they're doing in China. I don't agree with what Colin Kaepernick says or does. I tell you what, guys, I might not disagree with you. I don't agree with anything that anybody says, certainly these athletes that are really well paid either. But I tell you what, marketing, which is Nike's number one business model, is actually a marketing company. Marketing to quote unquote woke people is extraordinarily profitable. And what I would tell you is if you want to become a great investor, you got to put your politics to the side. You got to put your personal feelings to the side, because dollar bills don't have political affiliations. Dollar bills doesn't care if you're woke or you're not woke. Dollar bills care about making more dollar bills. And I will show you just very quickly how that attitude and that mindset has propelled me to have one of the best portfolio performances, I guarantee you, that you will see on YouTube. Over the last 3 years, this is my E-Trade account. You can see even my account number right here if you want to, or at least the last 4 digits. So this is over the last 3 years. The NASDAQ's up 90%. The S&P's up 52%. The Dow Jones up 32%, or excuse me, 30%. And yes, my IRA account over the last 3 years, not 3 months, not year, 2 years. Yes, last 3 years is up just a cool 111%. And that is because I don't let my politics decide where my investments goes. I don't care what these athletes say. I know a good brand and a good company when I see it, and these numbers absolutely don't lie, which is why we go over them in depth on every single video that we post here on the Investor channel. If you want to become a great investor, I know I can help you. And the number one thing that many of you got to do is separate your politics and your feelings away from your money, because your money doesn't care about either of those two things. Now, moving on to the quarter for Nike, came in at $12.2 billion. We'll show that on the numbers here. That's up 16% year over year, but they did miss by $220 million on that revenue side. Some other things actually counteracted this a little bit, and it makes this quarter actually look pretty good in my opinion. Now, for the last 3 months, like we talked about, here's that $12.2 billion. That's up 16%. Last year, we're sitting at about 10.6. The cost of sales went up about 12% as well. Now, one of the reasons why Nike is saying that they missed is because they've got supply chain issues. Okay, shoes and product coming out of Vietnam is very tough right now. You also got a backup in all the ports. Every time I go to San Francisco, I was down in Long Beach last weekend or 2 weekends ago, I see the backups there. Okay, it is real, and in everybody's opinion, it's temporary, but everybody has a different time length for temporary. And I'll tell you what, I can't tell you if temporary is 12 months. Can't tell you temporary is 24 months. I can't tell you if temporary is 6 months. I just know at some point those supply chains will work themselves out, and Nike will be very, very well prepared along with some of its competitors to really capitalize once those things work themselves out. Now, the other thing that I want to talk about with Nike, I think it's one of the most important figures, is this gross margin. So take a look at our gross profit. It actually grew. Our revenue grew 16%, but because our cost of sales only grew 12%, our gross profit actually grew 20%. Okay, we went from 4.7 billion up to this 5.7 billion. Okay, so we went from 44.8% gross margins up to 46.5% margins. So this goes along with what I said at the top. I don't care if you market to woke people. I don't care if you market to conservative or quote unquote non-woke people. Okay, if it's profitable, my dollar bills don't care whatsoever. And I tell you what, people are buying Nike product and they're paying more for it year over year. So you gotta absolutely love that. Okay, so we got some demand creation expenses. This is marketing. This is all your sponsorship dollars to LeBron James and Zion Williamson. This is the advertising at soccer games and TV and those types of things. Now that's up huge, up 36% year over year. And the main reason for that, in my opinion, is you still had a lot of sporting events not really at full capacity of this time last year. And so now almost all sporting events are not only at full capacity, but even the stands are at full capacity. So it's natural that demand creation, that marketing spend goes up tremendously. Operating overhead expenses went up 15%, and our total expenses down on these lines went up about 20%. Now, we do have to pay some interest expense on the debt that I'll show you on their balance sheet, but they also earn a little bit of interest from the cash that they have on their balance sheet. All things being considered, we paid 57, we got 40, so our total cost of debt is actually pretty small. So we've got our income before income taxes here at $2.1 billion. How do we get to that figure? We take this 5.7, we minus out our cost here. Okay, so we have our $12.2 billion in revenue, we minus off the cost of sales. That gets us gross profit. That's where we get these gross margin numbers. Then we got to subtract marketing and all the employees and all the front office staff and the back office staff and those types of things. That gets us to $3.5 billion worth of expenses. And you minus that off this 5.6 and you get this $2.1 billion of income before taxes. That is 23% growth. So yes, we grew our sales by 16%, but because Nike did a nice job controlling cost, they actually only grew their income. They actually grew their income by 23%. Our net income grew similar margin because our tax rate was essentially flat. We went from 11.5% effective tax rate to down to 11% effective tax rate. That means we netted out $1.8 billion on that net income side. The other thing I want to show you, one of the reasons why I love Nike as a company, again, why you put your political affiliations to the side, is because this company it has a paltry yield of 0.7%. But I tell you what, when I bought my Nike shirts, I think it was like paying 3 or 4%. So this thing used to be a quote unquote high yielder, but you get $1.10 per share. Okay, and now that the shares are up at over $100, it doesn't sound like a lot, but what I want to show you is this company has massive amount of room, and they raise their dividend every year, sometimes by as much as 10, 11%. Take a look. In the most recent quarter, on a diluted share basis, we earned $1.16. And again, this is a quarter where they had lots of trouble delivering product, okay, and getting a product onshore and even offshore from their manufacturing facilities into Europe, United States, and China, and the places where they sell it. They earned $1.16 per share in a quarter, 1 quarter, 3 months. For the whole year, in 12 months, they pay $1.10. So you better believe it. When Nike comes up on their board meeting, comes up for raising the dividend, yeah, they're going to raise it again, probably by 10 cents, 15 cents, 20 cents. I mean, they could double it and still have plenty of money. I don't expect them to double it, just for the record. Now, moving on to their balance sheet, really good balance sheet. Okay, most of it was bolstered because last year, I don't know if all this debt came on last year, but a good portion of debt, Nike, like a lot of companies, when the pandemic hit, they drew on their credit line. They got $9.4 billion in debt last year. They've got about that much, a little more actually, sitting on the balance sheet right now, about $9.4 billion in debt, but they have more than that in cash. cash. Okay, they got about 13, close to $14 billion in cash, just straight cash homey. They've got receivables in at $4.3 billion. Now, the other thing that we like to do with any apparel company, really any company that relies on getting goods over here and selling them, is we really want to pay close attention to inventory, because if inventory starts to stack up like we saw at Under Armour, this was like maybe 2 years ago, Under Armour's inventory was really stacking up, and what did they have to do? They had to sell a bunch of it into TJ Maxx and Marshalls and these discount stores, and that hurt their full price offerings. Nike, not necessarily the case. Look, inventory's virtually flat. In fact, it's down fractionally year over year. I love that, okay? Because that means they're not going to have a bunch of dead inventory. They're not going to have to run a bunch of clearance. That is going to help these gross margins at least maintain in this mid-40s and maybe even go up. Boy, if we can make those margins go up over at Nike, I tell you what, the double whammy for Nike is get the supply chain issues worked out, and that's not totally up to Nike, all right? There's a lot of things going on in the world that's, screwing up supply chains. But if we can somehow get that to start to work out, again, that might take 6 months, 12 months, 24 months, I don't really know. But if we can do that and then increase margins at the same time, hello, profits. Boy, we are going to be swimming very nicely over at Nike. Now, here's the other key thing that we like to take a look at with Nike. So we've got our North America unit here. What I saw was footwear, not necessarily growing explosively. It could be that we have footwear releases towards the end of the year that are a little more exciting. And so we'll see what happens. That went from 2.9 up to 3.2. Again, this is just in North America. But what's on fire over at Nike is apparel. Okay, that is up 27%. And this equipment's up 29%, but it's a really small number. It's basically a rounding error at 185 million. But I love that apparel is really on fire, because I think you get the Nike customer in at apparel and then they buy shoes and those types of things. Now, Europe is absolutely on fire as well. We're seeing similar growth in the footwear segment as North America. You got 10% growth there, but we are also seeing apparel follow through as well, up 19%. Now, China, I don't want to say it slowed down a little bit, but we'll talk about that when we get to operating incomes as well. But footwear actually grew healthy at 16% compared to Europe and North America. It's up, about 50-60% higher. We're at $1.4 billion, nearly $1.5 billion. Again, less than half of where you're at in North America, and it's very, very close to meeting where you're at with Europe. Now, the region that is absolutely on fire with Nike is the APAC region in Latin America. Okay, you got footwear up 35%, went from $758 up to $1 billion. So they're doing something right there. And you got apparel up 28% in that region as well. Again, these are, I wouldn't say relatively small numbers, but if they can continue to grow that region, what I'm seeing here with Nike is they had a reliance on China growth. I think the China growth, I don't want to say it's like stalled out, but it's definitely not the exponential growth like we've seen in prior quarters with Nike. But what I see here is a really nice balance, okay? Yeah, you're still really reliant on footwear here in the North America, but I don't think anybody's planning on that going away. $3.2 billion. And you got another about $2 billion in Europe and Middle East and Africa and those types of things. You got $1.5 billion in China, another $1 billion over in APAC. That's really nice balance, okay? And it's always going to be tipped probably in the favor of North America, maybe potentially China in some cases, but I love that balance. Now, the last thing here's earnings before interest and taxes, essentially EBIT or EBITDA, those types of things. What I want to show you is North America is up 10% on their earnings. We earned $1.3 billion last quarter, and we earned $1.4 billion on this quarter's revenue. Now, the other thing that I want to show you though is take a look at China. That really slowed down. And so while our sales kind of were good, the profit on those sales, or at least the earnings before taxes and those types of things, really slowed down. I thought it was possible by this quarter China would exceed Europe, Middle East, and Africa, but that did not happen. They earned $875 over in Europe, and Greater China grew at $701 million. So that really went sideways. Now, what's really super exciting is APAC and Latin America. That grew 72%. Take a look at this. You went from $280 in earnings up to $481 year over year. That is 72% growth. So if we can continue that momentum in that region, I tell you what, we got a great balance here, okay? We're not over-relying on China, and we're not overly relying even on the United States. With this type of balance, there's not many apparel companies, not many fashion companies that are public companies that can show you that type of performance. Now, from a stock chart performance, this thing's done something kind of weird. It had a big gap up, came back all the way up to 175. The initial gap started here at 150, and then we retraced all the way back to it to 150. And we had a really nice bounce going here, and we're starting to make higher lows here. Would I want to jump in here at Nike, already being overweight, already seeing massive increases in the stock price, since this is a stock I've owned for years and years and years now? Nike is actually one of the first individual stocks that I have ever bought for myself. And would I want to buy in here? Not necessarily, okay? I think a pullback all the way back to the bottom of the zone, 152, could create a buying opportunity, but you get back to 152, and there's this big, gigantic price gap down below it. Now, you will have support at 147. You will have some support down here at 139, but you get a pullback, and this is probably a broader market sell-off, which a lot of people are predicting, and we saw some evidence that it could materialize this week, although the markets just have taken off over the last few days. You get a pullback to 135 on this one. It's an absolutely stone cold buy. Now, if you hold these levels up here and we just kind of wave out, yeah, the bottom of the range could be 150, 151, which is only about $6 lower than the stock is right now. And you like that. I tell you what, if this one can break above 160, which is only about $2 or $3 above that, I think we could retest 164, 170, and potentially 175 on this one. If you want to play that momentum, I tell you what, you play it all the way up into 175, you set your trailing stop loss, and you move on throughout your day. Most of my mindset is a buy and hold investment. There's probably some trading opportunities here, but from a buy and hold, just buy and hold view, yes, you've got this growing dividend over at Nike, so that gives you a margin of error. And if you're trying to hold this stock for 10, 20, maybe even potentially 30 years, I wouldn't be too picky on the stock price, but I wouldn't necessarily move all my chips on the table. Let's say you wanted 10 shares of Nike at these levels, I'd probably nibble 2-3 shares and then wait to see if we get this pullback, see if this gap can fill, see if we get downward pressure in the markets. You could get better buying opportunities for Nike. And let's face it, Nike's not going anywhere, okay? And if we can get more sentiment that this company is too woke and those types of things, and people sell this stock off, well, I think you could get a very powerful brand on sale. If anything, you put this on your watch list. If you don't have much exposure to apparel and consumer discretionary type spending, well, this is a great stock to eventually add to your portfolio on any kind of pullback. Over the last year, up 34%. Year to date's up 11%, but when you stretch this out to 5 years, you can see why my portfolio is up huge over the last 3 years, because this stock alone's up 184%, not including dividends, over the last 5 years. That was Nike. Hopefully you guys enjoyed this video. We'll be back again soon. Hit that like button. Do me a favor and subscribe as well. I'd appreciate it. We'll be back again soon. Good luck with your investments.